All right, we're going to give this a third try here today. What a Monday we are having. Good afternoon, good evening, good night. It is Layer1Live. Hopefully you guys are having a good Monday. We are getting going here, so we're going to have a great episode. We've got a bunch of quick news. We've got discussion. We've got Bitcoin. We've got Ethereum. We've got EOS, Monero, and we've got working audio. So that's definitely a plus there. So I am going to be looking and managing the background here, and making sure that we have the right comments up, because it looks like we need to switch that over. So what's going on, fellas? We have a good week. Kieran's in the chat. Scott's in the chat. Let's get this started.
Yeah, man. You know, quarantine makes you appreciate the little things like audio, not just video. So appreciate you guys bearing with us here. Kieran's in the chat, Scott's in the chat, like you said. But yeah, you know, just another Monday, another day in the old quarantine. We've got a big week coming up with Solana, my man Jesse Proudman at Strix Leviathan, and then another fund next week. So for those of you who are kind of more on the investment or trading side, we've got some interesting episodes coming here. But for those of you in the chat, I think the most important thing to get to is Deem. Where are you located right now? Are you some sort of bunker?
Yeah, it looks like I'm in Gulag for those people that are playing Call of Duty. But yeah, it is a bunker background that I have here from Zoom. You can see my ramen in the back. You can see my vodka in the containers over there. You got gas mask. I thought it was pretty appropriate for the situation. So.
You're just permanent gulag, huh? You're not playing well these days.
It looks like you have an Xbox and some type of 1950s like communication device. So you're all over that. Dang, that's like a 1990s Windows.
That's Dimitri's desk, the actual desk.
That's awesome, man. Well, we appreciate everybody in the chat. Thank you for stopping by on your Monday. Like we said, we're doing these every Monday at 1. Layer 1 at 1, so appreciate you stopping by. Please leave a like. If it's your first time here, please leave a subscribe as well. That would be awesome. We have Dimitri's desk on Tuesdays and Fridays. We got interviews Wednesdays and Fridays. Sometimes we have to work around the guest schedule. But like Mike said, we have Solana this week. We have Jesse Proudman from Strix Leviathan. I do want to get to some of the stats from this past week, and I have them on rolling rotation here. Let me pull these up shortly. Let's see. What do we got? Taking a little bit longer than I thought it would.
Yeah, we were trying to get Twitter live going for you guys today, but alas, more technical difficulties. But we're going to have that. That's one thing we definitely want to do is set up Twitter live so that, you know, for those of you who are listening, maybe you're more on Twitter than you are YouTube. That will be coming in future weeks. So stay patient with us there for sure.
Yeah, definitely. So I got the top 5 countries. We got USA, we've got Australia, we've got Singapore, UK, and Germany. Those are the top 5. Top 3 episodes from this past week. Maple Leaf Capital actually beat out the Sandbox. Sandbox actually got a ton of views, but Maple's still pulling in the views there, as well as Orchid pulling in at number 3. Like we said, we've got Solana, Raj Gokul from Solana, Jesse Proudman from Strix Leviathan, and then we have Christopher Brookins from Valendiero Digital Assets. I know that's a tough one. That's a mouthful there, so I'm glad I got it. But yeah, without further ado, guys, let's get into the episode. Like I said, we've got the column there for those of you just popping in, maybe post episode, or even if you're doing live. We have the column showing where we are, B and D, that's breaking and discussion. So without further ado, let's hit it.
Boom. All right, let's roll. So quick news first. We got 2 pieces for me. BTC Hashrate jumps by up to 33% in 2 days. Now, this article came out April 6th. So if you actually look at the hash rate now, it has been climbing since the article came out. So the hash rate has been kind of going up, and everybody looks for that correlation between the hash rate and the BTC price. We've seen in the past where the hash rate pops and the BTC price follows. And we're kind of seeing that similar stuff where, the hash rates continue to rise and the price for BTC is kind of reflecting that as well. We'll see how long that's going to, stay at those levels, but everybody likes to watch those correlations, and make sure that the hash power doesn't fall, or to see if there's a divergence there. The next piece of news I have here is BTC Trading Volume on crypto exchanges collectively grew by 61% in Q1 this year. So, it's, you know, compared to the last quarter of 2019, basically there was a huge come up in volume, and that can be, you know, justified by just how much volatility there was in Q1 compared to Q4. So Q1, we did have, you know, alt season. We had like, you know, we had BTC rallying, like what was it, up for like, you know, close to 50% just in one single month, you know. So that's going to be reflected, you know, in terms of volume. Therefore, we see volume for BTC going higher. It'll be interesting to see, actually. Well, um, Black Monday was captured right in that Q1 as well, right? Because
Yeah.
right, so that's again, so that's a huge day when the volume was very abnormal just because of the systematic thing that was happening with BitMex and just the BTC price crashing. So you have to keep all those things in mind when you know, going over these articles that say, hey, listen, the volume is up 61% since last quarter, but it's like, okay, well, that's due just because of the ridiculous volatility that we've been dealing with on BTC just in general. So just
Yeah.
take that with a grain of salt.
An important lesson in reading the article and not just the headline as an investor, because you know, if you look at the data that the block shows, yeah, it's up 61% from Q4, but Q4 was down like,
Yeah.
you know, 33% from Q3 of 19. So it's really, we're kind of back to even at about 154 billion versus 155 billion in Q3 of 2019. So I got all excited, and then I jumped into the article and I was like, damn.
All right, well, I've got the next two stories. I've got Bitfinex joining a number of exchanges. Obviously, we've seen exchanges join like the staking services and staking ecosystems here, but Bitfinex announcing that they are offering 10%. This is a flat rate on EOS, V.Systems and Cosmos, that Atom token, as well as Tezos in May. Now we're going to get to this later in the story, because I feel like it is a big story for the EOS ecosystem, because Binance also released that they are doing staking services for EOS at an 8% clip. So it's going to be interesting. I don't think the details were released on how they can get to that 10% APR for token holders, because that's certainly not something that they can keep up forever, depending on you know, the processes that go into that. But it is good to see the you know, staking, the exchanges get into staking. Obviously, there's a governance aspect to that. If they get a ton of token holders, they can start to, you know, throw their weight around in the ecosystem. Obviously, them coming out at the same time as well is interesting, trying to attract those token holders to the various platforms. So that is that. We also have Canaan Creative, which is that Bitcoin mining producer, or they announced a loss actually of 148 million in 2019, and they're going to continue to see losses probably in 2020. They came out on a recent call, and the CEO, I believe, came out and said that based on coronavirus, which I'm sure is being thrown around in a lot of investor calls this quarter, due to a lot of different factors, they're not going to see a lot of profit, you know, this quarter as well as the rest of 2020. So, you know, they provided, I think, up to 20% of Bitcoin network's computing power. So basically the hash rate there. But it looks like they're still selling at a loss. The mining rigs that they were just releasing, that they said, I guess, in their prospectus during their IPO, was going to be around $700, but it's now retailing at around $1,200. So they are seeing a little bit of problems there. Canaan has, so which is a far cry from what they were doing in 2018. So it'll be interesting to see Canaan going forward in the Bitcoin mining situation in general as the halving approaches.
Yeah, it's definitely a strange one for sure, with basically the block rewards that miners are set to get to be cut in half. Canaan jumping the price of miners from 700 to 1200 is kind of crazy when you have, even if they are dated miners on, you know, the open market, you can buy it 40, 50, 60% discounts. Maybe they don't work forever, but it's yeah, it's a strange time for Bitcoin miners for sure. I've got 3 stories here on quick news before we hop into discussion, all around legal updates. It's you know, not kind of the most fun thing to talk through, but we definitely want to keep you guys posted, especially because so many of these primarily class action lawsuits, in my opinion, and I would guess in many, have a giant impact on the way crypto moves forward. So the first one is on Tether. The Tether lawsuit, as a reminder, is one where it's again out of New York, right, out of the Southern District, where basically people are saying that in April, USDT was not backed 1-to-1 by US dollars, and that they also supposedly have proof that there was one USDT account that was used to drive up half the value of Bitcoin's surge in 2017. So, I guess 10K worth out of the 20K, I would guess from 10K to 20K. So anyway, the update on Tether here is that, of course, in Tether fashion, they have launched a letter of intent saying that they plan to file a movement to dismiss the lawsuit out of New York. So, not a giant update here. The one interesting thing I found was that the lawsuit is seeking retribution for damages of greater than $1 trillion. This is coming from sunriseread.com. So, take that with a grain of salt. But, $1 trillion, that, it kind of shows you where these people are going with this lawsuit. Anyway, that's the Tether update. Now on the Binance update, this is in reference to the class action lawsuit we were talking about last week on Layer1Live. So if you weren't here, if you don't know what's going on, there's 11 or so different crypto companies that have been cited in a class action lawsuit that all basically revolve around selling unregistered securities in some way. If you look at the legal context right now, Bitcoin is essentially considered not a security. ETH, for the most part, is not considered a security. But past that, it's pretty sketchy. Ripple's been in court with it, with this same kind of claim around securities laws. And now you're going to have Binance and many others. So anyway, this article, this update in particular, is on Binance. Binance is particularly interesting because they have, not only sold various crypto assets, but they've also run IEOs. And also at the same time, they run their typical Binance exchange, and they also run the U.S. regulated Binance US exchange, which this article basically goes on to talk about how that might actually end up hurting them because there's less kind of leeway for them to talk through the traditional Binance exchange now that they have the US one. But basically the update there is that it's there's kind of some additional information on how this could be really bad for Binance because of all these factors. And while it will probably end up in a settlement, just the 3 or 4 years that it could take and the money that it could cost is going to set back Binance, I would think. So that's a Binance update there.
Kieran's got something to say in the chat. He's asking if Tron is a security. We need the expert opinion of both of you.
Oh my god! Ever since Black Thursday, Kieran's gone full troll, talking bullish on bears and is Tron a security. I don't know what happened.
Do a quick Howey test.
Mm-hmm.
True. That's all you need to do. Just throw it in the blender, see what comes out.
Yep.
Yeah, it's. I think we all know the answer there. Tron is a part of that class action lawsuit, so we might know soon enough. But the final legal update, and then we'll get to some fun stuff with the discussion, is good old Telegram. So Telegram has, in this case, some reinforcements coming to its side. If you didn't know, back in, I guess it was January, the quote unquote Chamber of Digital Commerce, which is basically like a blockchain advocacy group, came forward and said they were supporting Telegram in its case against the SEC around the Gram token being a security. Now there's another advocacy group called the Blockchain Association that is backing Telegram. Blockchain Association is pretty significant. I believe the Winklevoss are involved, Polychain, Coinbase, Ripple, Grayscale, right? Like some pretty prominent figures, many of whom I imagine have inroads into Washington or into the SEC in some form. So pretty significant backing there. It's good to see. I think a lot of people are worried that if Telegram's Gram tokens are deemed a security, that every other SAFT, essentially the agreement that is used to sell tokens that have yet to be issued, right? If the Gram token, which used a SAFT, is said to be a security, that could be very bad for a lot of other SAFTs that have not distributed tokens or that have distributed tokens. So from a legal standpoint, all you lawyers out there who on Monday at 1:30 are listening to us, talk about the law around securities laws that, you know, we don't
Fun
know
times.
much about. You know, drop us a line, let us know what you think, but it's definitely an important case for sure.
Awesome. Well, we got a bunch of news from discussion. Appreciate Kieran, you in the chat. I do want to get to some comments that we had over the weekend, but I don't have them pulled up here. I'm going to pull them up here in a second. We want to kind of shout out to everybody that's been supporting and leaving comments on the videos, the interview videos, as well as Dimitri's desk, as well as Layer1Live. So we appreciate you guys hopping in the chat. Looks like we got about 11 or 12 in the chat now, but we will get to discussion. One of the biggest, I wouldn't call it a story, but it was an article written by Arthur Hayes. It was a great, like, what was it actually called? Choose Your Fiction.
Choose Your Fiction.
Yeah, basically he's kind of like breaking down what's happening within crypto, within the macro markets, all this good stuff. So I know Dimitri was really excited about this one, so I know, and it looks like Mike's supposed to be talking about this one. So I guess Mike started off with Dimitri. Hit it home, man.
Yeah, for sure. So for those of you that don't know, the infamous Arthur Hayes tends every few months or so to write on the BitMex blog. BitMex blog has some great research as well. Obviously, BitMex has been going through a lot of drama lately, but Arthur Hayes, as of recently, has come out with two blogs. One which before this one was my favorite, where he's talking about buying credit default swaps while in the jungles of Japan. He's a great writer. It's a fun read. And then this one, the most recent one, like Q said, which is called Choose Your Fiction, basically talking shit on fiat and the Fed. And then he goes on to basically talk about his thoughts for Bitcoin and for crypto for the rest of 2020. You know, interestingly enough, he basically said, and to quote here, "This is act one of a global rebalancing. Every pocket of pricing distortion brought about by leverage will be exploited. Buy the dip at your peril." Said Bitcoin will be owned unlevered. Could the price retest 3K? Absolutely. As the SPX rolls over and tests 2K, expect all asset classes to puke again. So essentially he's bullish, but also very concerned in the short term. One of the things I want to get your opinion on, Deem, is that price retesting 3K that he talks about. But to finish it up in the last paragraph, which was kind of the holy grail of roll calls for crypto folks, if you will. He says, and I quote, "If you think I'm full of shit or a stark raving Cassandra, remember what you believed in pre and post COVID. Can your mental model revert back to January 2020? I will take my inflation adjusted pocket rockets, gold and Bitcoin, and call your Bretton Woods 7-2 offsuit, all in motherfuckers." To which I think, you know, when I read it, I kind of pushed back from the computer and was like, damn, he's, you know, basically has bought some credit default swaps and now is, at least according to this blog, going all in just on gold and Bitcoin, betting that this is going to not be a V-shaped or a U-shaped recovery with the traditional stock market and the economy in general, but is going to be, you know, that kind of global rebalancing or at least a major shift. So a lot there, a lot to talk through. Dean, what do you think?
Yeah, so I wanted to also say, just, you know, when we go over this article, we have to keep in mind who it's coming from. Even though Arthur Hayes is a legend, right? I love his stuff. You know, we obviously met him, and you know, he has really interesting perspectives. But you also have to consider the fact that he's the founder of a speculation platform where you can do 100x leverage. And, you know, he's going to provide you stories to kind of stir up some speculation on, you know, in crypto side and how COVID is impacting, you know, the markets and so on, global stuff. So just keep that in mind as you go through his material, that, you know, he's basically going to pick at these very speculative sectors and deliver some of his insight on what he thinks might happen, which, you know, still provides value to traders. But the stuff that I want to hit on, he actually covers a little bit kind of the history of the dollar as well, when it was pegged to the gold, and how, like, the dollar is the global reserve currency, and we can, you know, basically weather this storm, and we can do this ridiculous amount of stimulus just because that where US is in terms of being the global, you know, reserve currency. And he talked about specifically how he compared, US being the consumers, and then you have the Asia that's manufacturing basically sector. And then, if you go through the timeline where Asia basically China shut down due to COVID, so the manufacturing stopped, but the consumption was still there from US. And then when US shut down and China is opened back up, the manufacturing is coming back, but the consumption is not there, right? So there's all these disparities that are happening right now, on a global scale. And also, he's saying that the dollar is going to be the one that's going to continue to strengthen against other currencies. Well, because simply it is, like I've explained, it's the global reserve currency. It's used, he describes how it's used to purchase commodities, do a bunch of swaps with central banks in other countries. So dollar is still king. And overall, he does outline, all right, so how do you keep your capital safe and what his projections are, given the fact that he's explained that dollar is going to be increasing in value, against counterparties. I think that's a very good point for him to say, hey, within the next 1 to 2 years, I think BTC might not be benefiting from this, breakdown in economies, because we're going to have a deflationary period and where dollar is going to be king. He actually outlines a couple trades that he's doing, which is basically going long dollar against the Chinese CNH currency and the Korean won as well. So he's taking a pretty bullish position on US dollar against, the counterparties that's like in Asia. So I think but then he describes, obviously Bitcoin and how it's better against, let's say like a physical gold, that, everybody's kind of jumping into right now, because that's been like the, kind of the store of the value for thousands of years. But he says that Bitcoin is obviously more efficient. And I think that what he's trying to describe is that it will have to wait for BTC to really flourish post this economic like breakdown. So I know everybody's expecting for BTC to perform right now, given how like things are, right, with a bunch of stimulus that's being introduced, and everybody's hoping for inflation, all these things. But that's not going to be the case in the short term, because dollar is going to be deflationary first, and that can hurt BTC, and therefore he's saying that it might reach to 3K as being the price. Also, some interesting that he said is that this period is basically punishing all leveraged positions. So everybody who's using leverage that's extensive, I guess you could say, those people are getting punished for that because of the volatility that we see in the market. So you're clearing out basically some of the weak hands and leveraged positions. And guess what? BitMex, there's a lot of leverage positions there, especially from retail. So that's when we see a lot of capitulation from traders in general, too.
It's interesting to see the companies that thought they were recession proof. I love this term, right? We're recession proof, but are you pandemic proof? And we saw a lot of companies that thought that they were recession proof be levered up, right? Like even if there's a recession, people still need to travel. So we're going to continue to lever, but no one's traveling in a pandemic, which, kind of comes back to bite them. But a couple of the points that I thought were really interesting within and I want to get to some comments, but a couple of the points that I thought were interesting that Arthur made were the US is really one of the only countries in the world that can effectively like print themselves out of this, right? Like no, there's not a lot of countries that can print themselves out of this because they don't have that their currency as the world reserve currency. I do think that there's going to be some sizable shift in the way that the U.S. and the West, because who knows, based on what I just said, how does Europe come out of this? What does the euro look like out of this crisis? The West has always been the producer, and the East, the West has always been the consumer, and the East has always been the producer. Right? Did I say that correctly? It came out of my head, right? But anyways, how does that fundamentally shift? Not only if they if people go back to work and they have no money and things like that, like let's say like everything goes back to normal. Are people going to have in their minds that they need to shift the way that they consume products, right? It's not, hey, like everything's hunky-dory over here. Well, what happens if this happens again? I need to save money. So maybe moving more towards a saving economy than constant consumption economy. And that doesn't even say like worst case scenario, no one has any money. So now they can't consume anything. So it's interesting to see how the West, which is primarily where the most consumption happens. I mean, like I would say up to like 80% of consumption, something like that, some crazy number. Where does coronavirus in this epidemic and then also the financial crisis leave the West as retail consumers, right? Like,
right.
What happens there?
Yeah, I don't know. I mean, I think the narrative around people making these drastic changes on the way that they consume or the way that these businesses supply things is super sexy, but change is hard, right? People hate change. And as a consumer, if you are in a position where, the money that you're spending on food is coming from the government, even if for a little while, I find it hard to believe that they are then going to only buy agricultural products or electronics or the variety of other things that typically come from the East that theoretically would be more expensive if they came from the West, right? Like that's always been the reason that the East has been able to manufacture so much is because they can manufacture it for cheaper, right? Consumer always wants what's cheap relative to or at least within some balance of quality, right? If the milk is way cheaper but it tastes like shit, then they're not going to buy it. But they're also not going to buy the most expensive, handcrafted cow massaged milk either, because they can get a gallon of milk that tastes maybe not as good as that, but something similar. So, I mean, maybe the U.S. starts to in-house some key manufacturing like medical supplies, right? I think that's probably been the biggest microscope, right? For obvious reasons during the pandemic is, hey, okay, well, this virus started in China. We didn't believe it or we didn't hear about it for so long. And now we have to buy all of the medical supplies from the place that the virus originated. It's kind of a strange setup there, but I find it hard to believe that consumers are gonna drastically shift unless this is a multi-year thing.
Yeah, I guess you just have to believe that there's like a paradigm shift in the way people. God, we got 20 minutes in, and I think we called paradigm shift, but in the way people spend money, right? Like this is one of the craziest events of our lifetime. It's far beyond anything anyone in the U.S. has seen. God, we saw 9/11. We've been in a couple wars, all of these things, but like to have 10% of the workforce out of work, and then also have a lot of these other things happening where, the pandemic and things like this. But it's just like a pandemic. It's just like a paradigm shift in how people spend money, right? Like it's not so much like where they spend the money. It's that they're not spending the money in the ways that they were before. So I get like, okay, I'm not going to, although there is a case to be made that people are buying more local goods now, obviously. But I just think that there's going to be a shift in, and maybe it is kind of a sexy thought, at least right now, but people are going to like have a shift from being total consumers to maybe, hey, the government's not really on my side, and this isn't going to be some cycle that's going to go on forever. There's issues here, and maybe I need to save some more money than I was actually doing before, which can cut into global consumption. So
maybe that's where the Bitcoin narrative comes from, right? I mean, Yarrow in the chat basically said, serious question, what's the narrative around Bitcoin in the next few years? So if we do see that, if we do see a dramatic shift from consumption and all the stats around, average person in the US, I think it's like 60% of people don't have $400 saved for an emergency kind of setup, right? If that does dramatically shift, understanding that Bitcoin's a retail movement, what are the chances that Bitcoin can kind of fall into that narrative? And I think it's decent. Like Arthur says, short term, I don't think anybody knows what's going to happen. March 12th, Black Thursday. More than anything, we saw a giant kind of explosion of open interest, right? Both in volumes now, as we've continually seen, both on spot and on futures. And what that's going to do is it's going to make crypto quite a bit more manipulatable, right? Or malleable, right? If you have a ton of volume, it's a lot harder for one player or a group of players like miners to kind of throw the market around. But now as things kind of quiet down, seemingly, volatility will increase as Demas said. So short term Bitcoin narrative, it's like any bear market, assuming we go into it, right?
Yeah.
It's a lot of hodling. It's tough holding. If you can hold from here, buy here, and hold all the way down to 3K, and then try to make that investment back up for some upside from this level, good for you. Me personally, I'm not kind of taking that chance, right? I'm sitting pretty hedged myself. Obviously, not financial advice, but long term, to answer your question, I definitely think anytime you have a paradigm shift, or you at least have a discussion around a paradigm shift, that's going to be good for those post-pandemic assets like a Bitcoin.
Gotcha. All right. Well,
yeah.
Go ahead.
I wanted
Dima.
to jump in because you guys asked me a question and left me out. So the post-apocalyptic scenario, right? So we technically talking about consumers changing and all that stuff. So the big issue right now is that we're getting this injection of liquidity to people, right, to have money, right? But the spending has slowed down a lot, and that machine needs to work where people that get money, they spend that money so the wheel continues to move. So what you're suggesting is for people to change and start saving more. That's going to actually impact the recovery out of this, because the overall, it needs to actually flush through the system quickly. The velocity of money needs to move. So saving is actually what's going to hurt, and that's actually what's going to happen, because people are going to save money. And Mike left. He doesn't want to hear this.
He wants to, hey, spend.
Yeah.
Burr.
Yeah, exactly. And when he mentioned that statistics of 60% of people, right, where like they have like $500 in their bank account. So again, that goes back to what Arthur was saying, that people that are leveraged, and leverage can be seen in different types of things that you can do, right? It could be as easy as like on his platform to use 100x leverage, or you can be just leveraged financially, where you only have $500 in your savings and you have everything in credit, right? So and this economic time is again punishing those that are leveraged, and unfortunately, there's quite a bit of those people. That are leveraged in the market right now, just being financial where they are. But if you look at where people are spending money right now, it's actually interesting, because you would think that people will start counting down like on certain services, like get rid of like YouTube Music, Spotify, like maybe Netflix and all those things. But that's not true. Actually, all those things are they're keeping all those things, and actually that's booming. Like a lot of people will sign up for those services now because it's only like $5-8 a month, and it's not a big deal. But they'll like miss out on like something big, which is like rent or mortgage or like something like that, right? So it's like it's crazy, but that's like the current kind of like the state of things. And when we come out of on the other side, it's going to be interesting to see how many businesses survive too, because who can stay closed for that long. So the kind of the business world that we know it, it's going to be very interesting how it's going to change, and who's going to be still alive when we come out and even go to local shops that we know that in New York, they're boarded up everything, like a bunch of like restaurants. So who knows who's going to reopen, who's not. So it's going to be pretty intense.
There's some large cities that aren't going to get better for a long time, right? But I'm of the camp that we should reopen the economy at some point in the near future. Like I think we should be able to get the healthy people at a safe social distancing level where people can start going back to work, maybe younger individuals, because like it's funny to me when people say, "Oh, we're going to be locked down until September." And I'm just like, how is that? Like this thing needs to roll. Like we can't just like sit at home and like get checks from the government forever. Technically, I guess we could. I mean, they're already showing that they will do that, and it'll probably continue into election season. But it's like at some point we need to get rolling, right? And if we can practice safe social distancing within the workplace and get the economy back on track, I think we'll be good. I do want to get to some comments here. We had a bunch come in as we were talking. We love those conversations. Yarrow said Bretton Woods has been over for some time. I think Arthur was referencing kind of the legacy of Bretton Woods more than like Bretton Woods itself. Prodigy is saying, "What's up, guys? Hope y'all are staying safe and love the grind. Good information. Thanks, Prodigy. Appreciate that." Yarrow says, "Serious question. What's the narrative around Bitcoin in the next few years?" And Kieran said, "New paradigm," which I'm sure he's just, we better put a paradigm shift dinger up here. Every time somebody says paradigm, we're going to throw it up. And then Shun Sing Cheng said a lot that I'll get to here in a second. But let's get to Yaro here for a second. Serious question. What's the narrative around Bitcoin?
That's what we just hit, Doug.
Yeah.
I guess you're right. Okay. That's fair.
But
I know.
Shun had an interesting point about Europe here. There's a big conflict going on in Europe between Northern Europe and Southern Europe, because Northern Europe, your Germany, your Netherlands, right? They're the well-off countries, whereas Southern Europe, your Italy's and your Spain's, they're leaning on those northern countries for help. So it's funny, like for those of us who are in the U.S., I think we're almost more worried about like what is the recovery going to look like, whereas a lot of other countries, especially those in Europe, like if you were in Italy, where Italy has the highest number of deaths basically across the globe, they're not looking at like, hey, when will the recovery start? They're looking at like, is there going to be any recovery? Are we going to be able to get bailed out? Because we were already in so much debt. We already had so many issues in the financial system. Like where do we go from here? Is Germany going to help out? Is the Netherlands going to help out? Whomever. So I would say we're fortunate to be in the U.S. for that reason as well, and some interesting points there from Sean.
Yeah, Germany's going to have an interesting conundrum, man. They're basically propping up the EU right now, along with, I think, there's probably one other economy that I'm not thinking about, maybe the Netherlands, like you said. But that is going to – I don't want to get to my full thoughts on the EU because we could go down a whole nother rabbit hole there. But, there's a fair point there. The Southern Europeans, I mean, Spain's not handling it well either. But surely Italy is the example being thrown around right now.
Yeah, for sure. And the final point I'll say here on the kind of the Arthur Hayes and Bitcoin and right this narrative, Deem, you were talking about how it'll be interesting to see which businesses emerge and which ones kind of fail after this. And the narrative that has made the most sense to me is one about an acceleration of the times, right? And what that means is that if you look at what is happening to businesses that are in good standing, right, and are prepped for the future, your Amazons, your Netflix, right, all of the businesses that have slowly over the last few decades been taking market share from your traditional maybe brick and mortar stores or whatnot, those businesses are flourishing, right? Amazon's hiring another 75,000 people. Netflix, I'm sure, is crushing it, right? All these various streaming businesses or apps, right? Just an influx of customers who are stuck at home looking for stimulation, looking for things to do. Whereas on the other side of the coin, your Macy's, right? Which at this point is just basically a tenant more than anything. I find it incredibly hard to believe that Macy's is going to come out of this and all of a sudden people are going to just stop shopping on Amazon and stop shopping on the internet and go back in droves to Macy's. So the acceleration occurs when maybe it's 5 years from now, maybe it's 10 years, 15 years from now that a Macy's type institution would fail, would go bankrupt. Now maybe that happens in 6 months or 12 months or 18 months. So it's that acceleration of this kind of quote unquote paradigm shift that might be happening. So there's a lot out there. There's a lot of people who, supposedly know what's going to happen. Obviously we don't, but it's fun to it's fun to kind of talk through. Unless you guys have any other thoughts on that, there's a wild kind of botnet of sorts that's popped up.
Speaking of bots, we got a bot in our channel right now. What's up? What's up, Arabi Gamer? Thank you for dropping the best Telegram bot to mine Bitcoin that ever existed into our chat. Prodigy is, it looks like we have some boots on the ground information. Kieran was saying, let's talk about lifting the lockdown in Australia and Taiwan, since they mostly got it under control. And then Shun goes on to say, I grew up in Europe, but I'm living in Taiwan at the moment. We have no lockdown. So boom, that's some boots on the ground information that you're getting from Layer 1. Prodigy's also asking, I know y'all had to touch on the open world Bitcoin game, blockchain game that Zach was playing around with the idea of. Any more info on the development of that, or still about the same? If you stick around, I'll talk about more about these blockchain NFT kind of metaverse worlds later in the episode. We'll have like a little segment that we'll talk about it in that we'll add. But go ahead, Mike.
Yeah, for sure. So this was an article that came across via kind of the Monero alerts that I have. Monero, we talked a little bit about last week, kind of some strange theories or conspiracy theories going around about how maybe Satoshi founded Monero. So this is how I saw this. It's a Forbes article. I'm going to drop it here in the chat, but it's all about basically a botnet that some researchers out of China are pretty worried about. It originated in China. It's called, it's called DDG. And it has essentially already managed to quote unquote enslave about 20,000 computers. And what that means is that, basically you have this this network of computers that are infected with some sort of malware, and the excess computing power or the computer in general, without it being known, are able to perform some action, which in this case is mine Monero. So as of now, there are 4,000 of these kind of so-called zombie computers that are used to mine Monero, which is obviously a pretty significant amount. If you can put that much computing power together, you can most likely mine a significant amount of Monero. Now, typically with these botnets, evidently what happens is that you're able to kind of target the criminal enterprise or the criminals who are hosting this, right? There's a weak point in the chain of some sort of domain or server or something of the sort, right? Where once you can kind of take down that, you can get rid of the momentum that botnet has. But in this case, they're struggling to do so because there's this kind of plan B that DDG, this botnet, has put into place, and it's a proprietary peer-to-peer network where, basically if any sort of servers can be shut down, they automatically switch over to these peer-to-peer channels to keep the operation running. The operation being the mining of the Monero, right? So if you load up 4,000 computers, people start to see what's going on. They're able to shut it down. That obviously you're going to have some issues in the proof of work mining setup with Monero. But like I said, in summary, they're using these peer-to-peer channels to basically keep it running no matter what. The report comes from a company in China, a cybersecurity company in China called NetLab 360, who, like I said, says that it's mostly happening. Most of these infections, no pun intended, are occurring in China with these computers, something like 86%. So it's kind of the first that we've heard of this, obviously, where Monero being really the largest privacy coin in crypto is kind of this private incentive, if you will, for these botnets to go out and mine through this new setup. So this isn't super related to crypto or the markets, but I found it super interesting because of because of the Monero connection and just kind of the general the general parallel that it has to the internet or computing power in general, right? Mm-hmm. This is literally a network that is living via bots and able to make money in what is seemingly a pretty perfect way, right? A way that is tough to shut down. So it's wild times.
Yeah, this kind of reminds me of the Matrix, to be honest. Got Agent Smith kind of going in and infecting each different software and then becoming another one. But this conversation kind of revolves around like the quantum computing stuff that we've talked about a little bit. I feel like it's along that same parallel, right? Because you have a situation where the tech can be used to maybe kind of create a situation where you have not Bitcoin going down, but people can use quantum computing in different ways, as well as this botnet. I feel like is a great example. But yeah, I mean, Monero seems to be a good target, if you will, of this botnet. But yeah, cool story, man. That was a good find.
So,
yeah, for sure.
So is this bullish or bearish?
Bullish on bears.
Yeah, for sure. It's like I said, not related to the crypto market, but Monero keeps popping up in the news. There's a ton of narratives around the government taking over everyone's privacy, around trying to keep people healthy and safe and whatnot from the virus. And Monero might be something that, your privacy in general, right? Privacy coins might be something that continue to kind of feed off of that narrative. But it's going to be, it's going to be a struggle to get past the kind of the quote unquote botnet FUD and all of the illicit things that are being done with privacy coins as well. We've talked a lot about that in the past, where the new FATF or FATFA guidance makes it really tough for exchanges to list these privacy coins. And while we haven't seen them delisted yet, that's always a risk. So anyway, drop that in the chat there if you guys want to take a look a bit deeper on that botnet. I know that Scott was saying, honestly, that botnet is kind of cool. That's where I was coming from with it as well. It's like this wild, it's just obviously, hate to see computers compromised, but it's pretty wild.
Yeah, definitely. Guys, I wanted to feature, I think we just hit an all-time high on Layer1Live. We had 24 concurrent viewers, so
Nice.
appreciate you guys coming in the chat. Thank you. Thank you for stopping by. Please leave a like if you're a first-time member or first-time person in the chat. Please leave a subscribe as well. We'd love to continue making these better, and we will. We're going Twitter live next week, so be on the lookout for that as as well.
At some point.
At some point. Technical difficulties. All right, go ahead. What do we got, Dima?
Yeah, so up next, we got the Fed announced another 2.3 trillion funding. So more printing is happening, more liquidity. Everybody's getting $1. You're getting $1. I'm getting $1. And small businesses. Well, this one specifically was addressed towards helping out. It's giving the loans to small businesses and municipal bonds, liquidity, and kind of in the background, all these things that are happening with the businesses in those states struggling, smaller businesses like we've just described, but we don't know who's going to come out on the other side. This package, the 2.3 trillion, is going to be split into provide liquidity for loans for small businesses as well as municipalities, because we know that everybody's staying at home. There's a lot of municipal sections of the states are not operating the way they were operating. At the same time, also, you don't want to have issues with municipalities, because that's when you're going to start having issues with like essential staff of that you have for fire department, police, and all that stuff, right? That we love for protecting us. So this package is really going towards assisting on all kinds of different levels of business, coming from going from the bottom of a small business, going all the way to the municipality to provide liquidity there should you need it. And just so you guys know, I mean, municipal bonds are actually, they cannot default by law. Like municipal bonds, they cannot default by law, period. So, and right now, because of the way things are, obviously, certain states are not getting enough income, to be able to pay like these yields and all for these bonds. So therefore, we have Fed coming in and saying, hey, listen, all right, we got the municipal bonds covered, so don't worry about that. They've talked about what else here?
Payrolls was a big one. I'm not sure if you mentioned that.
There was like a one-time, I think this is what we were talking about earlier, right, Mike? I sent you like a link and you had said you had kind of looked into some of this. Yeah. And I think there's like a one-time payment of $10K that doesn't need to be repaid by the small business owner. Right. So there's like an opportunity there for if you have a small business to look into that. I want to know when we're going to go on like full Bank of Japan and just start buying equities up. When is the Fed going to start buying equities, bro?
Yeah, that's an interesting question. I mean, you could, the Austrian economist in me would argue that that's been happening for a long time through these buybacks, right? If the Fed prints money and the money goes to banks and banks buy back their own stocks through some fancy financial maneuvering, then you could argue that's happening there. I think it's called the TALF, the TALF, Term Asset-Backed Securities Loan Facility, which, essentially, in the ripple effects that you have from this, if you have a small landscaping business or electrical contracting company or some other non-essential business where you are paying tens or dozens or up to, I think it was 500 workers, at least for Pennsylvania, you can get these loans. The goal is to keep all of these employees on payroll for 8 weeks, and then you don't have to pay back the loans as long as you retain those employees there after that 8-week period. So, you can't really kind of mess with it and get the money in and then, get rid of the people on the payroll. So there's some security there for the Fed. But, there was a point here I wanted to talk about with the Fed, but I can't remember.
So many of them.
Yeah, in and out. Deem. After reading through this, I know you've kind of been looking into some of this stuff as well. Do you think we see more of this with the Fed? Do we continue to see more funding, or are we kind of topping off?
Yeah, I think the Fed is basically throwing everything, including the kitchen sink, at at the market at the moment, just to basically provide confidence at at this point. So, my thing is that all of this doesn't necessarily has to be used, have to be used in terms of like all this stimulus, but since they're throwing in so much money, I think a lot of businesses that not necessarily need the capital, they'll be like, hey, I might just as well do something and finesse in order to get this capital. And that's going to be kind of the dark side of this stimulus, where certain players are going to take advantage of just how far are they going to stimulate the economy. And they're going to start making their case, especially let's say maybe for municipal bonds and others, that like are going to say, hey, listen, well, we're projecting we got impacted by X amount, so we should get like this much stimulus and so on. But also with your point when you mentioned, nationalizing what is it, buying stocks, right?
Right. Buybacks, yeah.
Yeah. So there's a lot of talk, obviously, where if we're providing stimulus to these companies, then the government should take some equity in the company, and that would be kind of like a way for for the taxpayers to kind of get it back. But once you get into that type of talk, then everybody's going to start talking about nationalizing companies and all that stuff, right? Which is it gets very
it's a slippery slope.
Yeah,
it is a slippery slope, and honestly, it's been increasingly hard to keep politics out of what we're talking about on this show. I feel like we'll eventually get back to it, but to be honest, man, like if you factor in unemployment plus stimulus check, a lot of these people are going to be making almost more than they were when they were working like 9 to 5s, like 40, 50 hours a week. And it's my opinion that Donald Trump and Biden are going to be using these stimulus checks or what have you to continue to get that voter support, right? It's like example A, I get my stimulus check. Example B, I don't get my stimulus check. Who am I voting for? Right. So I think that's going to continue into it's a very slippery slope, man. Like we're moving towards that road of UBI, and I know I was a big proponent of Andrew Yang, but this isn't what I envisioned. When
be careful what you wish for.
Yeah,
right?
exactly. Yeah, it's fair. Yeah. Fair.
Yeah, the thing that I wanted to bring up when you were talking about municipal bonds, Deem, and how they're not, by law able to fail, that the municipal bond market is a wild market to live in or trade in or invest in. And the one thing that I think a lot of people aren't talking about that will have a giant impact on this is the delay of people needing to pay their taxes to July. So I think they delayed it by 3 months, from April 15th being the deadline, where obviously the incentive is to not have people worry about that. They need to be worried about, providing for their families, taking care of the kids. The government doesn't want them to go out and meet with their accountant, for example. And certainly because of all the chaos in funding, I would imagine this will kind of free up the IRS to do some other things and help out the government as well. But anyway, that 3 month delay, let's take these municipalities, for example, right? Little teeny tiny boroughs or counties or cities. If their taxes are necessarily delayed for 3 months, then all of what they, probably are barely getting to on a yearly basis now has to be pushed up for 3 months. Essentially, what I'm getting at is that I think the ripple effects of these small cities or boroughs or counties not receiving their tax payments online, or even the states, right? You take it at the state level, could be something pretty significant. I remember when Andrea, my wife, was working for a local university, there was some big issue because the state budget had gone way over time to basically be finalized, right? Kind of one group said that they didn't want the budget to be this big. Another group said they did want it to be this big. What you had was the university, a nonprofit, not able to finalize their budget because so much of what they were receiving from the state was still up in the air. So this went on for months and months and months. And it got to a point where key members, key employees within the university didn't even know if they were going to have a job in the next year because the university couldn't set the budget because the state couldn't agree on it, right? So it's all these little ripple effects that, we're flooding everything with funding, right? Trillions and trillions of dollars. That's not necessarily, I think, to solve a lot of the ripple effects that we're going to see from this pandemic, but it's more to make sure that kind of there's oil in the gears, right? That things are flowing smoothly. There's enough cash for payrolls to happen, for businesses to exist, right? For, on a much broader scale, right, central bank FX swaps to happen. So, months from now, I imagine we'll look back and see all this funding, and everybody might look and say, well, what the hell was all this for, right? Like, where did it all go? I received $1,200. You printed trillions of dollars. To your point, Q, I'm still struggling, right? What are you going to do for me in these next 4 years? So
I think the craziest meme that is going to come out of all of this is that fast money meme. Did you see that with God, what's the guy's name? Kramer on there. What's the guy from Fast Money? What's his name?
No,
Jim Cramer.
Jim Cramer. Yeah.
I don't think that's fast money. That's yeah, you're right.
Okay, so Jim Cramer, it's like 10. I guess the bottom line ticker says something like 10% of all unemployed in America, and then in the background it's like stocks see all-time highs or something like that. It's just like, what's wrong with this picture? And that definitely has a lot to do with what you guys are talking about with the Fed printing money and trying to make sure that people feel safe, and that the banks are going to be propped up again, as we see. Guys, another all-time high, 26 concurrent viewers. We appreciate everybody in the chat. So we talked about BitMex a little bit, but we do have one more story. Guys, let's fly through this one.
Yep. Yeah. So just real quick. So the headline came out basically saying that BitMex has been bleeding in terms of how much Bitcoin they have on their platform from their customers. So basically, after what happened on Black Thursday, a lot of people felt like, it was unfair when this whole liquidation just started and Bitcoin continued to drop. So they figured, hey, listen, this platform has a systematic problem that cost me a lot of money, so therefore I'm not going to trade there, especially with the current players that are available right now that we have in the market, that have similar features like insurance fund and have established credibility, especially during the time when we had that Black Thursday and they were operating fine. BitMex suffered quite a bit, and therefore their overall Bitcoin balance from the customers that hold Bitcoin on BitMex dropped by 38%, which is quite a bit. And it's really kind of sad to see BitMex being that kind of leader in perpetual swap trading take that hit. But that was because of the fact that how things carried out during the Black Thursday, because if you had your capital elsewhere, you might have not been impacted that much. And also at the same time, that whole impact of Black Thursday that came from BitMex actually rippled through into the spot market, which impacted those prices as well. So I think a lot of people are very salty about that specific event, and they're like, hey, I'm not going to support this exchange, therefore I'm going to move to another exchange that's not going to have a toxic systematic type of issue should we experience a black swan event like that,
right,
in the future. But I also wanted to talk, the reason I brought this up, I want to talk about in general with exchanges, where certain exchanges are losing market share and others are gaining. And people are starting to focus on things like execution and all right, so if I'm if this happens, what is the execution engine going to do? How sophisticated it is? They start asking all these questions that before nobody really asked. How much does it cost to execute a trade and all those things, where I've talked in the past, and when you trade FX or any other product shares, you consider execution as being the huge kind of point where you select your platform,
Mm.
or also the cost of trading. But we don't have that. We don't have that in crypto just yet. So right now, due to this events, everybody's starting to now do their research and ask tough questions. So like, all right, what's the execution going to be given, like, if we experience a black swan event, what is going to be the cost and so on. So I think, overall, generally, all traders in crypto are starting to ask these important questions and selecting which platform is more suitable for them. And we're seeing that, a capital flow.
Yeah, it seems to come up every once in a while. Obviously, the crazy kind of liquidation spiral, or whatever you want to call it, with BitMex is one of those things where you're warned about it, and I think in the case of most futures traders, they have traditionally chosen BitMex because it has the most volumes, and that's going to play into things like funding rates and liquidity and a variety of other things. But every once in a while, something happens, and everybody kind of, whether they lose money or not, sit back and look at the wreckage and say, okay, well, what happens if BitMex goes down, right? How do I get my money back? It's kind of this hybrid regulated futures exchange. It doesn't really have a home, run obviously by these, absolute sharks, right? Who, in my opinion, with BitMex, it's one of those things. I don't think BitMex is necessarily out to say, hunt for stops or do anything like this, but I would imagine that because BitMex is so profit driven, and because you have these sharks, these infamous types like Arthur Hayes running the shop, that every once in a while that focus on profits kind of coincides with things that don't work well for traders, right? So it's not necessarily something that, on company internals, hey, we're going to screw over our users, but like I said, those profits coincide with things that are not good for users. And you see this in every platform, right? Like we talked about last week, how Coinbase Custody has the most Tezos under them, even though they charge the largest fees. They charge like 25% fees on the staking rewards you're going to get for Coinbase. So, maybe people reevaluate and say, well, Binance only offers, or only takes 7% fees, right? And Kraken, or Binance doesn't take any, Kraken takes 7% rather. So it's this constant kind of back and forth between, I think, traders who are looking at platforms like BitMex or Coinbase or Binance, who've done some shady shit, but that's where all the action is. That's where I'm going to make the most money, so I'm going to stay there. I don't necessarily buy into the fact that there's going to be this massive outflow from BitMex to Bybit or Deribit or some of these others. I think basically what we're seeing is open interest, which was at giant highs, right? Open interest was at over $1 billion before that March 12th Black Thursday event. Basically got halved, right? It got cut in half and hasn't recovered in any giant way. So I think what we've seen more on BitMex than other platforms is just people having gotten completely wiped out, right? Where they've moved into stable coins and are holding it in an ETH wallet or on another exchange. Maybe they just took whatever Bitcoin they had left and threw it in cold storage. But I find it hard to believe that BitMex is going to kind of slowly slide down the charts and not recover from this, when from a financial standpoint, they're way better off than Bybit and Deribit, right? Their insurance fund is giant. They've got over 35,000 Bitcoin in their insurance fund. I just think it's going to take time for people to get comfortable trading, especially with leverage in the market right now. There's a lot of bearish sentiment. There's a lot of negative sentiment, and the overhang of what will be a recession is significant too.
Do you think BitMex suffers kind of from like that Mike Dudas effect that the block does, with having Arthur Hayes be such like a controversial figure? Like if he came out and kind of like had this, and I understand that the people that use derivatives exchanges, are a small minority of the entire crypto user base, but at the same time, would him going out and kind of putting out that olive branch to that community that feels kind of, especially after this death spiral where a bunch of people got liquidated, is him coming out in more of a or less of a fuck you approach to everybody? Would that help like BitMex's reputation? Do you think he'll get to that point if you see maybe more competitors kind of come up to BitMex's level?
I think that once you get to a certain point as a counterparty, as an exchange, right? It doesn't much matter what you do, right? We see this with CZ, where CZ, for at least in my opinion, has just completely been blown at the last few months, right?
Mm-hmm.
The PR around Binance has not been good, but Binance futures volumes are higher than they've ever been. And futures, believe it or not, are actually a pretty significant market share within crypto. Spot has jumped since this liquidation event, but it's only jumped from like 3 to 8% according to some sources. So futures traders, speculators, if you will, these kind of quote unquote investors are what is driving most of crypto, even if more of them are on the sidelines than normal right now. So, maybe it makes sense for Arthur to come out and kind of do the rounds, shake the hands, kiss the babies, say sorry for kind of this event. But I don't know that it's gonna much matter if BitMex has the most liquidity. If they can jump back up into that number 1 or number 2 spot as far as futures exchanges go, I think last I saw they were in 4th or 5th. If they can jump back up there, I don't know that whatever he does is going to have any impact.
Got it. Okay.
Yeah, no, I was just going to mention also, I've talked about this before, and it's interesting that you mentioned, like kind of like exchanges having a conflict of interest with the traders, right? So that has been a popular rhetoric in FX when people are trading, their brokers are taking the other side of their trades. Here in crypto, we have basically market makers that are on those platforms that do kind of similar stuff where maybe there's conflict of interest there, and they can profit from liquidations and so on, right? Ideally what I'm looking for is once we mature enough, all these exchanges like BitMex, Bybit, and so on, they'll just be LPs. Now, LPs will be put together by a broker, let's say a broker that's going to aggregate all the liquidity from all these exchanges. And these market makers on those exchanges are going to compete for the retail, and they're going to compete for giving the best price and execution. And the broker is going to have basically seat belts, and where if this LP, let's say, starts, quoting some ridiculous prices or providing really bad liquidity, they're going to start, taking away the order flow to that LP. So I think the overall, once we mature, all these platforms like BitMex, they're going to become just an LP that will be connected to a platform or a broker that's going to aggregate all this liquidity, score it based on all right, these guys have been providing X amount of fills for these orders. They've been on top of the book all the time, so they get the priority and so on, right? So which will benefit at the end in making efficient trading for the retail crowd when we're doing this. Because right now we're just directly trading with the LP, which we have no choice, and they dictate, basically how they want to run their shop.
Yeah, the only reason I think I could see that not happening is because crypto doesn't have the same regulatory standards that traditional finance does, right? So basically what you're getting at is whether you are just someone who's maybe not as financially literate as others, and you just want to buy some Apple stock, some Netflix stock, and hold it somewhere, right? Your broker is your E-Trade or your Robinhood or whatever, right there. And then you have other brokers above that who are maybe pulling buy orders or sell orders from a Robinhood, right? Where basically Robinhood is going to go to some desk and sell these takers in exchange for a fee, right? So that's how Robinhood makes money. Yeah, you don't have to pay anything into Robinhood, but they're taking your order and they're going to route it somewhere to somebody who's going to pay Robinhood, some small percentage of that trade. But the reason that occurs in traditional finance is because there are actual laws in stone that dictate how, basically how or when or why you're able to access the market, right? Crypto's 24/7. If you want to choose, Coinbase or Bitfinex, or you want to trade futures on BitMex or Bybit, right? Unless you're based in an area that is restricted from that exchange and you're not using a VPN, it's really the only reason you can't have access to that exchange. But turn on a quick VPN, create your fake account, whatever, as long as you're okay with the withdrawal or trading limits, you can, for the most part, do whatever you want in crypto. So if I'm somebody who just wants to buy some Bitcoin and hold it, why would I go to a Tagomi or one of these big brokers when I can just do it all from my phone on Coinbase, right?
Yeah, it's not geared for the people that are long term, right? It's geared for the traders that constantly trade, and turn the volume. So BitMex is platform for speculators, and they want to push the flow, right? So it's not somebody who's trying to
Right.
buy Bitcoin and hold it. They're not going to go to BitMex.
Of course not. But even then, right, the more sophisticated traders, right, the concept of the funding rate, right, basically the incentive that you're getting to go long or to go short on the exchange, why would someone give that up to a broker when they have all the same access to do exactly the same thing on one single exchange? I mean, it's a pain in the ass. It's inconvenient to place orders on Deribit, Bybit, and BitMex, but the incentive to do that is something like that funding rate. So until, at least for me, until a broker can either run the same incentives as the front of house or kind of front of the line exchanges, as I would call them, like a BitMex or a Bybit, right? Unless there's some sort of incentive you can give people to trade with that broker, or the convenience is so high, right? If you're gonna fill on some crazy best price, right, where you're gonna actually you're gonna make up that funding rate by using that broker. I don't see crypto moving that way. Maybe for some of the traditional, like let's take a traditional financial firm, they exist in this model, in this whole kind of like, okay, hey, I've got my forex brokers, I've got my my guys who are selling me my bonds, my ETFs, whatever it is. Yeah, maybe I bring on like a crypto broker, right? Because I'm not as jump trading or somebody going to just create a BitMex account and log on, or create a Ledger X account and log on and start placing trades this way. I'm gonna have giant flow that somebody else is gonna execute for me, and I'm gonna basically in one way or another pay for that convenience. Maybe I see it that way, with these crypto brokers plugging into those who already use the brokers, but it's a hard sell for me to see what I would call your crypto traders or your crypto holders doing that.
Well, I think you have to look at people at the end of the day. They're gonna have to choose, right? There's not gonna be a regulation that's gonna push this change. But the reason why I think people are gonna switch to this is because of diversifying your risk when you're trading and not being exposed to a single order book. Now, the reason why I think the bigger guys might use it in US, because they're regulated in US, they're registered in US, and they're only limited to liquidity available for Bitcoin in US, and they don't have access to liquidity to platforms that are not regulated in Asia and so on. So you're missing out on quite a bit of liquidity there if you're trading just within the registered, regulated entities. So by using this aggregate platform of liquidity, you'll be able to access liquidity from platforms that are not regulated that you wouldn't have access to operating in US. So that's just the top of the line kind of benefit for those people to access liquidity for the big guys. But in regards to funding rates, I mean, that gets passed along. I mean, obviously there's a little spread, right, that the broker takes, but that gets passed along because we have that in FX. We have the rollover rates, right? So it's like each day, you either pay rollover, or you or you earn rollover based on the interest rates and so on. So and that can be passed along in crypto as well. But I think it's a little bit quite, it's out there, right? It's not going to happen soon. I think we're still going to see a lot of pain from other exchanges maybe mispracticing, and people, are going to start looking for a solution. And then, if there's a player that's legit like that will aggregate it and have a sophisticated control over these LPs, where they will have to compete to provide the best, kind of execution price and everything, to get that flow from retail or from crypto traders, that will be the best environment.
Yeah, I like that idea. Obviously, I'm not as technical as far as the actual processes of the trading goes, but I like the idea of that aggregator of exchanges, right? Because it keeps, I wouldn't say it keeps them honest, but competition is always going to force people to do whatever it takes to bring in the users, bring in the investors, bring in the moolah. So having that aggregator forces these what would be sectored out derivatives exchanges to actually act in the best interest of the investor. So I like that idea. I wonder if you can't even have a decentralized broker in that sense. I know that there's been and again, I'm diving into deep water here, so I don't want to get myself, I don't want to drown or anything, but I wonder if you couldn't set up a decentralized broker that would cut that pushing funding down the line, right? Because if you set up a decentralized broker system, you don't have to pay the fees that would normally go to that broker.
Yeah, 0x is doing this a little bit. I think it's 0x. They're basically trying to create a relayer model that pulls liquidity from every again, quote unquote, for those not watching on the video, I'm doing the air quotes here, decentralized exchange, because as we've talked about many times before, I'm not sure a real truly decentralized exchange exists anymore, at least not in any size due to regulation. So, you know, you kind of have that. You kind of have a decentralized broker. I mean, really, what you're referring to is just kind of a pool of peer-to-peer liquidity, right? And there's always going to be peer-to-peer OTC transactions happening in crypto because of its digital nature. But yeah, it's a wild world.
I think it would be tough for a decentralized broker, because brokerages typically also provide quite a bit of customer service and that, you know, that communication with clients, which is what I think exchanges are doing it at a poor level, excluding like Bybit. They have a pretty good support there, but overall the support is kind of, you know, weak from the exchanges because they're LPs. So the brokers will fill that. You know, and if you have a decentralized broker, then, you know, then exchanges will still have to fill, you know, all the
well,
issues,
then you just get to minimally viable decentralization, bro. You get a little sprinkle of decentralization in there, or maybe just throw it on your white paper. But anyways, I do want to shout out, God, we spent a lot of time on that last talk there. So
don't get us going, man.
Yeah. So I do want to get to the next story. We're going to hop into Ethereum. I did throw the arrow down to Ethereum like maybe 5 minutes ago. So apologies for the people that are following via that column. But I did want to shout out Scott. We've got Kieran, Yarrow, Prodigy, Shun, our resident bot, or Robbie Gamer. We've got Fooled.
I banned him, don't worry.
Okay, all right. Fooled by Randomness is a good one. I think Fooled by Randomness says, "Hey guys, just wanted to say this channel is a Bitcoin mine of information, so thank you." He threw the pun in there, so that's pretty good. But to everyone that's been commenting, thank you very much. This has probably been our most successful Layer1Live to date. We did hit that all-time high of like 26 viewers, so appreciate you guys in the chat. We will get to the Ethereum news now. This is one of the bigger stories that I'll drop in the chat now, and it's going to be a video of the actual breaking of the story. Let me make sure that I got this. But basically, Reddit is coming out with a ERC-20 rewards token. So if you haven't been on Reddit, which I'm sure most of you have been, you do have that karma token that you get via like it's basically like a reputation token, right? That you can then spend towards I think voting on certain things. It's basically like reputation within your subreddit. And I think you have a all-time total of karma as well, so that follows you around. But it's basically like reputations within different communities. Well, Alex Ohanian actually is the co-founder, or Alexis Ohanian, I'm sorry, is the co-founder co-founder of Reddit. He actually has a venture firm called Initialized Capital that's funded crypto projects. I think right now it says Horizon Games, which is Skyweaver, which is on Ethereum. So Alexis Ohanian actually has dabbled in crypto, and it looks like they're taking Reddit this route, or at least trying to experiment with it. I just dropped it in the chat. That is a video of kind of an explainer of what this token, which is going to be, I believe, called the community token, if I'm not mistaken. Community
points, yep.
Yeah, so these community points are going to be used like a reputation system, and they're going to be an ERC-20 standard, so they're going to be on the Ethereum blockchain. They make a bunch of different claims on this video if you guys want to watch it, but basically they are highlighting all the cool things about blockchain, right? The community points belong to you. It doesn't belong to Reddit, which right now Karma does. So it looks like they're taking snapshots of Karma on a 4-week rolling period, and they're transferring community points to these individuals. Really cool, really big moment for Ethereum. I think a lot of good projects have been, been popping up on Ethereum, kind of within the crypto community, but for Reddit to actually start to have an ERC-20 standard token and start to experiment with the happenings on Ethereum and blockchain in general, absolutely gigantic. I think for the most part, these community points are going to be used as like a reputation system where you'll be able to kind of like show off how many community points you'll be able to vote these community points in the way you do with Karma. But huge to see Reddit getting into the blockchain game. Shout out to Alexis Ohanian for doing this, man. It's amazing.
Yeah, definitely. It's worth a read. It's on CoinDesk. There's a ton of details here. Vitalik even chimes in at one point, which I'll get to. But talking about kind of one piece that could be used on Reddit is polls, and these polls are basically conducted with these points, which the polls will show both what the total votes are per vote per person, basically, as well as the weighted total for the vote per point, basically meaning that those with more points will have an outsized impact on the poll, right? So there's definitely going to be a gamification aspect of it there, where the more you interact on Reddit, the more kind of essentially community points, or in this case karma, that you earn or already have, the more of a kind of giant user you're going to be in this. So there's a bunch of details. There's obviously a ton that Reddit can do with this. Vitalik talks a little bit about an idea from Virgil Griffith around how Reddit could utilize Ethereum. And this was interesting. Virgil basically said that if you allowed subreddits to set up a arbitrary smart contract address, that you could have DAO-like setups for every single different subreddit, right? Where the community points interacted with that smart contract address through polling or through fundraising or God knows what, right? You can do a ton of different things with smart contracts. So I agree, right? This could be a giant moment for ETH. There's a lot going on with ETH behind the scenes. The next story we have is on kind of some DeFi resilience that I'll talk about. But don't forget, I mean, ETH is coming up here on a giant moment with their transition from proof of work to proof of stake. And you've got the price now at a point that's obviously way cheaper. We're sitting at about 150, 155 bucks right now. You've got all these various proof of work miners who need to be collecting as much ETH as possible if they want to participate in the proof of stake validation setup. So it's ETH is moving forward, while I think a lot of other protocols are either kind of stuck in the mud or moving backwards.
Yeah, I don't know, man. I'm not really a big fan of
Ukrainian
Reddit.
bear.
Yeah,
Really?
my opinion of Reddit. I don't know. I have mixed opinions just about the platform itself. But all right, with this new move, yeah, it sounds great on paper, but I'm pretty sure, like, I don't know when they're looking to implement this, but once they implement it, I think there might be issues around where, okay, so if they're gonna find some loopholes where we can, get a lot of these points and use it for voting or destabilization of, if there's some way to game it, how do you patch it, right? And how do you take away these points from from people?
So to answer that question, like Reddit's a centralized service, right? Like they're a company. They're going to have people. At least they said it. They laid it out in that video. They're going to have people that are assigned to making sure that these tokens are not gamed, like you're saying. So it's not like, hey, Reddit
can take away points too, right?
They can't take away. I doubt that they can take away points, right? Like if there's a Black Swan event where like somebody hacks and like takes all the tokens, it'll be interesting to see what happens, right? Like, oh, do they now fork the community points token? Who knows? But so they can't take it away, right? It's an ERC-20. Like they're not going to be able to go into your MetaMask or go into whatever service you use, your Ethereum address, your Ethereum wallet, and be able to take those tokens away. So it's a fair point, but they're going to have guidelines around. Again, it's minimally viable decentralization, right? Like they're going to implement a piece of decentralization. It's not like Reddit's going fully on the blockchain.
Yeah, and they're going to test this out, right? It sounds like they're kind of grabbing various subreddit groups or various users and kind of testing it out to see how it goes first. But yeah, I mean, you're right. Any time, as we've seen with DeFi, you're working with the ETH blockchain and there's congestion. There's interesting things that can can happen there. But Alexis Ohanian is smart, right? As we said at the beginning of this, he's already investing in crypto projects via that venture firm or that capital firm he's working with. So, Brave, I think, integrates with Twitter. You can tip BAT as well on Twitter. So there's kind of this emergence of blockchain and social media happening quickly or slowly, I guess, depending on how you look at it.
I look at it as a continuance of these like token economies that kind of can spring up, right? We've talked about play to earn. This is a great example. Like there's a reason why platforms like Reddit going to this community points and Voice doing a play to earn model with their Voice token. Dude, this is going to be the future, man. Like, yeah. And then so then what happens is you have this community points token that you can then use in Horizon Games Skyweaver. And then now you have the game associated with the Reddit community, and you have a token that's used within this ecosystem. Certainly there's speculators. We talked about it with the Sandbox, Sebastian at Sandbox. Like, there's going to be speculators. Once this token hits a market, which I'm sure eventually it will, if it's an ERC-20 standard, it can be sent to a DEX all the time, right? Yep. So it'll be interesting to see. But like that's where we're headed, man. A bunch of like sectored communities, maybe large like Reddit, but could be small like Sandbox, at least starting out, that each have these tokens that fund the ecosystem. It's crazy, man. I'm super interested. It's a huge moment for me. I can't overstate how big I think this is for at least like gaming economies and social media economies.
Yeah, well,
just stop shadow banning. That's it.
Yeah,
please
tell here if you want to hit a 10-second story on why you hate Reddit.
Yeah, I hate Reddit because, well, I put a lot of content that's very good under subreddits that could be valuable, but they continue to shadow ban because I don't have enough karma or I don't have enough points, whatnot, right? And then like, I don't know. It's just like people are trying to game a certain way to get more karma. So they do like silly things just to get more karma. So they're not actually providing like a good response or productive response. There's a lot of trolling. Like, it's just, man.
You know what, man? If you're bad in the gulag, don't blame the Call of Duty game. You know what I mean? You just got to get better.
Don't hate the player.
Yeah, exactly.
Yeah, I will say this is really funny on one level that when I first read this, because I watched the video and it was talking about Ethereum being close to Bitcoin. And for the most part, like Bitcoin is like a huge like subreddit of on Reddit, right? Like there's a ton of Bitcoin maxis on Reddit that even if like we would post a video we did with a project that was building on Ethereum, right? Like they were building ERC-20 standard and they would instantly flag it. They'd be like shitcoin. Do you remember that text? Well, it's funny now, asshole. Like your tokens are actually going to be on the Ethereum blockchain.
That's amazing. That's amazing. Yeah, for sure. Well, cool. We're coming up on about an hour and a half here. It's been a great episode so far. We've got one more ETH related story, 2 EOS stories that we've talked a little bit about so far. And then finally, a quick little Monero piece that I'll finish up with. But this was super interesting. Basically, a variety of different Chicago-based trading firms have come together to put together the Chicago DeFi Alliance. Basically, as it says on their website, the Chicago DeFi Alliance was created to support startups in crypto finance at all stages with access to market makers, liquidity, product feedback, professionalized traders, and talent. Take your project from an idea to a full-fledged product for traders. So obviously what this is getting at is basically the fact that Jump Capital, Volt Capital, CMT Digital, Cumberland, right? Giant Chicago-based firms that are now founding members of this Chicago DeFi Alliance evidently see the power or the future in DeFi enough that they're going to spend time in kind of this consulting or consultative format to help out those who are building or ideating on DeFi. Essentially the setup is one where a variety of folks from each of these firms, you've got a general partner at Volt Capital, you've got a principal at Jump Capital, you've got the director of strategy from Cumberland. They're all going to spend some time helping out those who are building or trading on DeFi to give them feedback, help them attract liquidity, offer other products or kind of financial firms that are interested in participating in this. And I got a lot of thoughts on this, but it is definitely good for DeFi. I think the more that DeFi can work with the most experienced traders in the world, like those within the Chicago DeFi Alliance, the better off DeFi is going to be. It's, why kind of go through the same pitfalls that have occurred decades beforehand versus, kind of learning from the best on the trading front, or the market maker front, right? With all these various trading firms. Before I kick it over to you, Deem, it is important to note that a lot of these firms already are working within crypto to some degree, right? Jump Capital is a giant trading firm. They manage billions and billions of dollars, and have invested in BlockFi and are clients of a lot of these other kind of more institutional firms or funds within crypto. Cumberland, right, is a giant Bitcoin miner and a giant OTC desk. So it's not like we're kind of going from 0 to 100 here. There's context, there's existing relationships within the industry that allow this to kind of make a little bit more sense to those outside of this network. But overall, it looks like these firms, these traders, these liquidity providers, whatever you want to call it, are going to help bootstrap liquidity, mentor these various DeFi platforms. So Deem, I definitely want to get your take on this.
Yeah, DeFi is in trouble when you see a headline that says DeFi Alliance is launching. Otherwise, there probably wouldn't be that much of a pull together to try to figure out what the hell is going on in DeFi and how we can fix it. Yeah, it is a good thing, but you also have to think of why is this happening now? And I think bringing all these resources together because they're really trying to fix DeFi because how it is now and how it weathered the storm during the Black Thursday is really not the way DeFi should be behaving. So they get all these people in to figure this out, which is a good thing. But it just also shows you the fact that hey, there are some real issues right now that really needs to be addressed, and that's why the alliance is there.
Yeah, for sure. I mean, the first thought that I had when I saw this tweet was the scene from Finding Nemo.
That was a good meme. I was gonna say that was a great meme.
The sharks come up to Nemo and his friends and are like, "Fish are friends, not food," because basically what you have is the most prominent trading firms in the world now offering a helping hand to the innovators, right, within crypto. So if I'm somebody who's come up with some brand new way to generate returns in DeFi, and a Jump Capital reaches out or a Volt Capital reaches out, or I can reach out to these people now, yeah, there's a lot of benefit to me, but you have to understand the benefit on the other side, right? If you've come up with some interesting way to generate alpha in crypto, maybe that applies in traditional finance, and they basically are going to take your IP and apply it to other routes. So in the same way that like FTX, right, a futures exchange, basically an exchange that is run by a crypto quant firm, is running like a sandbox on trading strategies, right? In that same way, it might not necessarily be the best thing, at least initially, for some of these new DeFi traders, but I get kind of the benefits on both sides, right? It allows some of these giant capital firms, some of these giant trading firms to, get their hands deeper in the cookie jar within crypto while also providing benefits, like bringing liquidity to their brand new platform or their brand new product or service or whatever it is.
Yeah, absolutely. You hit on that dark side as well. So yeah, there's certain tricks that, those guys have done in traditional markets, in FX and so on, like these latency issues, front running, all that stuff. Well, guess what? Those guys are experts at it. So yeah, there's the dark side a little bit to it, where they, might take advantage of it. But, in the long term, we'll hope that it's all going to move forward in a better way.
Yeah, it seems like probing, right? Like they're sending out little scouts, say, what's going on here? And it reminds me of like being at conferences and seeing Western Union at some of these. Like, like they'd have booths and I'd be like, what the hell is going on here? So it definitely seems like they're probing. But yeah, man, that's a good story. We ready to move on?
Yeah, definitely. There's some interesting news in EOS. What we got going on?
Interesting news. I'm gonna move. I'm gonna be really astute about this. I'm gonna move the actual column now so that people following along can actually have the right information. So getting better at that. All right, so Block One has been making moves, man. Like we've been waiting for Block One to make moves like this for a long time. A lot of people, and Mike doesn't care about this, obviously. He just leaves.
Mike is making moves too.
Yeah, he just leaves when EOS talk comes on. But we've been waiting a long time, right? And some would say like it's too late. I think a lot of people have left the EOS ecosystem, and they would not have if Block One had taken a bigger stance earlier. But I think they were waiting maybe on regulation, maybe on that settling with the SEC, things like that. But it appears that Block One will be voting starting in May. This would be voting their 9.5% of total circulating supply of tokens towards block producers that they think are going to be the ones that need to be highlighted, right? And I think this is a good opportunity for, maybe an Asia or an East-West connection here with Block One. They're doing things behind the scenes. This goes along with the launch of their public blockchain engagement group, I guess, or division they're calling it. I think the guys from EOS New York are going to be part of this PBE. And let me drop the link now to make sure that you guys follow along correctly. But I want to hear what you guys think. Obviously, we have some EOS supporters in the chat, so I want to hear what you guys have to think about Block One voting. Initially, what will happen is Block One will vote for these block producers and not receive any rewards, staking rewards for it. Now, I don't know the processes behind not receiving rewards. I didn't know that you could just kind of turn off the spigot of receiving rewards, but basically, they're going to be voting and highlighting different block producers within the ecosystem. I think this is a good thing, and it will. And I think Scott just chimed in the chat. He says, "I'm excited to see who Block One values as a block producer." I want to drop EOS acknowledgements.io. It was a random. It was kind of a random tweet from Block One. But basically, it's a list. It's just like a front-facing list of people that are, I guess, EOS supporters. And they're taking... I don't know who actually runs this. It was kind of like a last-minute thing that I added in here. But interestingly enough, Zach Gall and Everything EOS aren't on this list. And they actually tweeted out snubbed when this actually got released. But there's a ton of Korean, ton of Chinese individuals on this list, which is good to see. I think that's been there's been a splinter, within the EOS ecosystem for a while. I think that East-West fight hurt not only the token price, but just the general trajectory of where EOS could have gone. So I think in general, I like this Block One voting. I like what Block One's doing with his EOS acknowledgements to kind of heal the community a little bit. I know that's kind of face value, right? Like there's a ton of different things going on behind the scenes that we don't know about, but should be interesting. What do you guys think?
Block One actually came out with the EOS acknowledgements?
Yeah, I'm almost positive. So again, like what I said was that along with this voting, the public, what was it called? Public blockchain engagement. So the PBE, and I'm guessing the guys over at EOS New York, the reason that they were acquired was to kind of head up this PBE. So public blockchain engagement, EOS acknowledgements.io sounds like one of their like first little
Gotcha.
Moves. Let me check Block One's Twitter and make sure. There wasn't much information. It was just like tweeted out kind of, and we'll see what happens there. What do you think?
Yeah, this kind of comes full circle on something we talked about a few weeks back, where there was this community proposal set up that was being pitched for EOS, where essentially some sort of kind of like DAO-like structure would exist where users or investors or community members could hopefully vote and choose which thing should be built on top of EOS.io. And Brendan Bloomer came out and was kind of against it.
Oh, this is now, WPS.
WPS, yeah, that's what it was. The worker proposal system. Thank you. He basically came out and was like, I don't know. And a lot of people are like, well, what do you mean? Like, how is this bad for EOS? And now this makes sense, right? They want to make sure that they obviously, now that they've settled with the SEC, have some big say with all of the money that they've been able to raise in the EOS blockchain governance. The question I have for you, Q, understanding that we've done a podcast with Tezos and obviously you're aware of all the other side chains. What does this do for those other side chains? Do you think this is a big hit against somebody like a Tezos, or will it not necessarily affect Tezos, with the thought being that, hey, now that Block One is coming to the forefront and is supposedly going to be voting on EOS, right, and hopefully doing all these other things for the EOS, like the main chain, if you will, does that hurt the pitch of Tezos and some of these others?
I think Douglas from Tezos can kind of almost like be Craig Wrightish in the way that he like attacks EOS a little bit. I wish he would do that less, but I understand why he does so. Obviously, that attacking the governance issues on the main chain helps Tezos in their governance, and certainly if you look at those chains, like they're mainly Western based chains. So I think that they can coexist in parallel, man. I really do. I don't think maybe it hurts it over the long term, but what's good for the main chain always trickles down. That's just my thought process. If the main chain continues to get larger, that flows in to Tezos on a bigger scale, as long as Tezos kind of keeps up in their development and things like that. I think it's the same thing for Wax. I think creating larger networks on maybe like Wax can funnel back to the main chain, which then funnels to Tezos. Like it seems to be one big ecosystem for me. But you're right. Like I definitely think like the smaller chains were pointing to this governance issue, which is not going to be just solved because Block One is voting, right? Like it's not, everything's not going to be solved. People are still going to have issues. But I think it definitely hurts that specific argument.
Yeah, for sure. And you got to think that Block One is not going to come out and completely like do something that's going to harm the Chinese exchanges in some way. That would be dumb, in my opinion, right? So if you're going to come out and just like vote for, let's say, all the U.S. exchanges and none of the Chinese exchanges, like
this can turn into a shit show real fast, man. Like I'm just, it's going to be very, like, they have to come out and be very delicate with how they pull this off, because this thing with BPs has been around, for a while in terms of drama and conflicts and who's right, who's wrong, who's doing things right, and now you have like, Block One coming out and actually, making this statement. So I think, I don't know, man, this can cause a lot of drama.
Fortunately for us, we now know two people who have gotten jobs at Block One. So hopefully in the future here, we can have them on and kind of get their opinion of it, and maybe they have some insight into the way that it's going to work.
Yeah, I don't think anybody can claim that Block One's been not delicate enough. I think if anybody's making a complaint, it's that they've been too delicate. So them launching this public blockchain engagement program, I think they understand. Like, and that's one of the reasons I dropped that EOS acknowledgements.io, is because there's a ton of Asian, that being Korean and Chinese individuals on that list, almost making up like 50 to 60% of the list. So I think they're taking a measured approach. They'll probably be too measured for our liking.
Scott had some interesting comments too. I know you said he was talking about maybe they'll bring in some outside talent. They had mentioned supposedly that colleges and big businesses were on the horizon. Interesting comment as well from Scott is that depending on the way that Tezos and Wax were born, Block One should have a significant amount of those tokens as well. So
yeah, no. So one of them definitely was like a if not both. I'm blanking. For those of you that have any Tezos or Wax, I know one of them, and I missed out on it. I think it was Tezos. It was like a snapshot. Yeah. So I missed out on that snapshot. Actually, I don't know what the heck I was doing that week, but or that month. Anyways, that's an interesting point. That's a great point. I didn't even think about that snapshot. They definitely own some Tezos and definitely some Wax.
Yeah, so time will tell on that front.
Yeah, to your worker proposal system like comment as well. Like this could fund this. They said that they're not going to gain voting rewards at first, but certainly with 9.5% of the circulating supply being voted, eventually, like they said in I think a follow-up article or that article itself, they'll eventually start getting rewards. And where do those rewards go to? That's going to probably fund the ecosystem, and they're going to start their own worker proposal system. So I heard Yves LaRose talking with Zach Gall on Everything EOS episode, I believe, like 2 days ago. And he might be in talks with Brendan, right? Like on how the worker proposal system affects EOS in general. Because if you start, EOS Nation started this worker proposal system, right? So Brendan's concern is that something that centralized can be used to, hurt, like Dimitri's saying, there's a lot of problems that come along with things like that. So I think Eve, who is heading up EOS Nation and that WPS, is in talks with Brendan about like how these worker proposal systems will affect the ecosystem. So
yeah, pay attention to EOS.
Yep.
That sleeper pick for sure.
I appreciate you saying that. My bags appreciate that. So I'll go through this really quick. The last EOS story we have is that Binance is offering 8% APR, and obviously we talked about it earlier, but Bitfinex is offering 10% APR. Not much to talk about here, but it looks like the service will be activated. It says as of Monday, April 13th. So as of today, users will be able to lock their EOS deposits for 7 or 30 days, earning 6 or 8% APR respectively. Now, for us US folk that do not have a VPN, EOS is not available on US Binance, I believe. I went to go actually check out.
I was actually shocked. That's crazy.
Yeah, I'm not certain why, especially with that SEC filing or that SEC payment.
They're on Coinbase, right?
I believe so.
Yeah, so
that's a great question. Anybody know why EOS is not on Binance US? It will be interesting. But for those of you that are not in the US, or those of you that dabble with VPNs, not investment advice, obviously, but you can now go onto Bitfinex and you can go onto Binance and receive APR. I'm not an expert at where they incur the fees to actually pay out 8 to 10% APR. Don't really understand how they can do that for a long period of time, because I don't understand how they can actually set that rate of 10% for a long time, because to me it's variable based on like everything that's happening. I'm certainly like lending and borrowing affects that percentage. So if you guys could give me kind of a 30-second, a spark notes on where those percentages come from, because I think some people would be interested.
I think there might be a little bit of lending and borrowing going on, but I think mostly what they're getting at is their return on EOS because it's delegated proof of stake, right? So like if you look at a Tezos, the reward number is relatively stable at like 7 to 8%. So if you're a Binance, it's going to be really hard for you to offer 15% rewards on Tezos. Versus something that's like an EOS or a Cosmos or a V.Systems, all of those three of which, Bitfinex is offering 10% rewards on. With delegated proof of stake, the more you climb that ladder, the more rewards you should receive. So if Bitfinex is like top 3 and has multiple block producers in the top 10 or top 15 for EOS, right? Like 10% rewards are not going to be that difficult, I would think, because they should be seeing more than 10% return on the block producers that they already have. So does that make sense?
Yeah.
Like, I think because it's not a set rate, because the way delegated proof of stake works, as your proportional amount of EOS increases, so should your proportional block reward up to a certain degree. They should be able to give away 10%. I would doubt they're taking outside funds and topping it off. But I do think it's interesting that at the same time Block One came out and said they're going to be voting for block producers, Bitfinex came out and said, hey, give you 10% if you give us your EOS.
Yeah. Yeah, that is another debate to be had. Dimitri, did you have anything on
on the percent, yeah. So one thing I just want to add, keep in mind that this 8% or 10% APR, it's at that level until it's not, and I would want to look into how like they can change that rate. Is it each month, or what, right? Because everybody looks like, oh yeah, damn, I can get 10% for the whole year. Nah, that rate can actually probably fluctuate, and guess what? If things start going down, that could be, it's also like in like credit markets known as also like introductory rate, or like to lure people in, so to lure in the capital, and then after that you can start fluctuating. So I think in general in lending right now and borrowing, there's a huge race to acquire as much capital right now, and they will subsidize rates, they will do a bunch of stuff just so they can acquire the market, and then after that they'll start fluctuating the rates according to like what it should be. But I agree with Mike in terms of, you can, from proof, delegated stake, like POS, like you can calculate what's your yield going to be for the end of the year, right? So yeah, that is pretty fixed there. But I think there's huge things that are going on, just borrowing and lending that are offering these rates right now.
Yeah, definitely. I think the last thing we'll probably get at as far as this APR goes is the power that it then gives to the exchanges, right? Like, for the most part, I think a lot of the voting power that they're going to receive is from like large players, right? Like institutional people who are now voting for their node. It's not coming from the individuals. It's coming from large stakes. Like, and you can actually look at this like on the blockchain. Like, most of the votes that they receive are that are being staked and locked toward these exchanges are big holders. It's not like a bunch of small little holders, putting 5 EOS here, 10 EOS there. It's the guys with strong amount of EOS staking to the node. So I don't want to like overshoot this issue and make it seem like all of these individuals are giving power to these exchanges when it's not their fault at all. But there is an argument to be made that when you do stake to these exchanges, just make sure that you understand you're giving them power within this ecosystem. Like I said, it's not a lot of small individuals, but just keep that in mind.
I can't believe there hasn't been a product or a service that's come out that has super clean UI. I don't know that they could partner with exchanges, but the UI, the UX for users would be super simple. This product or service would exist across every DPoS service and basically be a way for users to pool funds together without having to do so on a centralized exchange, right? So this would kind of be like a DAO structure or setup where however much you as a user push towards this pool is the vote that you have on that pool. But instead of it being run by a centralized provider, it's run by some sort of service that takes no profit. Maybe they just sell ads on the front end, right? And
that'd just be a proxy.
Yeah, it'd be a giant proxy that runs across multiple delegated proof of stake platforms, and is relatively faceless. It's run by community members. Maybe there's some sort of giant regulatory hurdle, but at this point, I mean, delegated proof of stake's been out for years. Like, where are we?
This is it. You guys are hearing it first. We're starting a proxy DAO. Here we go.
when dev, we need a dev, somebody to build that. But the one thing that I found the most interesting, this was kind of hidden in this article from the block. I'll post it here in the chat so that you guys can follow along if you want. But on the topic here, the block went out and had a quick little interview in December with Tim Ogilvy, the founder and CEO of Staked. We've done the same. He's been on the podcast. Definitely worth a listen. Staked is basically a proxy, right? Who runs the servers necessary for basically giant capital firms or institutions who want some sort of exposure to these assets, and individuals, who want some exposure to this crypto asset, but don't want to have to manage the staking piece of it. Yeah, there's retail aspects as well. You can use Staked. They seem to be a great platform. But anyway, Tim came out and said that every exchange, custodian, and wallet is going to be getting into the business of staking. And the article ends with that. And to me, when an insider like that says that's the equivalent of like a Bitcoin miner saying something bullish or bearish for Bitcoin, right? Staked is one who, at least in the US, has the network to understand kind of where this is going. And I wanted to get your guys' thoughts on this, as to kind of what would happen, right? If we had every exchange, custodian, and wallet now fighting for staking, how does any delegated proof of stake or proof of stake blockchain exist without these proxies, right? Basically, unless you're some giant whale who can run their own node, even then you probably don't have enough, right? You're really voting for somebody else. The ability to run a block producer, unless you're on a small chain that doesn't have exchanges or custodians or wallets involved, right? The ability to do that is decreasing very quickly.
Well, what is the process? So, what is the process Tim and Stake take when they look at different networks? Are they looking at the actual block producers and seeing which ones provide value? Or are they just like, dude, let's just throw it out there? Or they're not a block producer themselves. They're out there staking two different nodes, correct? Am I like, they don't have a node on EOS?
No, they have a node.
So they strictly vote for their nodes.
Oh yeah. Why wouldn't they? Right. So like on Cosmos, like they're a giant block producer on Cosmos. And from what Tim has told us, their business model is different in that, unlike a lot of staking pools or exchanges, they don't go out and try to get retail votes.
So they're not a proxy. They proxy to themselves.
They're a proxy for institutions, is what I'm getting at.
Yeah,
right?
I see.
So if these venture firms want to make a seed investment in a delegated proof of stake or a proof of stake chain, they just, this is a 3, 5, 7, 10 year time frame that they have, and vesting period probably somewhere around that same amount of time. So why am I, as a venture firm, going to go through the process of running this node that I have to claim rewards from daily, right? Potentially, depending on how it works. I know what I'll do. I'll just give it to Staked, right?
I trust Tim.
Yeah, I trust Tim, right? US based company. They already have a ton of business. They work with these other firms. Hey, do you guys want to onboard V.Systems or whatever my next investment is, Orchid or Solana, right? And now you have Staked, who is, in this case, acting as a proxy for giant institutional firms, because these venture firms or capital firms trust Staked to run the node constantly.
So what was the original question?
So my question was generally kind of, if this is the case, right? If Tim is right, and basically every exchange, custodian, wallet, anybody that has access to a ton of these tokens are going to move into the staking space, what does that do for the future of staking? And obviously that's super open-ended, but you're basically going from the initial concept of proof of stake, where it's supposed to be that everybody has a stake in the network, to now, as we've seen in other aspects of crypto, these kind of monopolistic institutions are holding off the top 100 or the top 21 or the top 300 nodes.
I think it's the same argument that was made with when exchanges moved in, right? Like it was like, oh, look at little me, and look at Binance, right? Coming on and being a top block producer, or some of these big Chinese exchanges. This happened on EOS already. I think you can set an arbitrary cap and a user. Like if you're working with something like Staked, they're not going to like go behind the back of this foundation and like, okay, Staked, like, so I'll be the foundation, for example, and I'm talking to Tim. Tim, you can only have X amount of votes on this platform, and you cannot create another account and continuously create these accounts. I understand that sounds centralized as shit.
Yeah.
But but I mean, like, again, most of this shit is not fully decentralized, nor will it ever be. So to get around this, you could set an arbitrary cap on what these nodes can do per node, so that you don't have a system that has that.
But then you have to enforce that somehow.
You enforce it via foundation. You're the foundation. I don't know.
So you're just going to ban Staked, who is running all of the capital for all the venture firms that invested in you? That seems pretty rough.
Yeah.
Seems legit.
I mean, I guess, I'm throwing out ideas here.
I'm just playing devil's advocate, right? Like my point is that when you run into a scenario like this, where the garden gets completely walled off by the biggest players, where do incentives go for those retail users who are the ones who are actually providing value to the network, right? Like Atom is only so valuable as its developers and its users, right? So assuming that none of the wallets or custodians or exchanges are providing value for Atom, the incentive, is super skewed, because now as a dev, I have to give my tokens to Staked in order to get my reward, or I have to vote my tokens to Bitfinex or whoever the hell on EOS, right? Or on Tezos or whatnot. Obviously it varies protocol to protocol, but you get into some weird kind of bastardized incentive structures when that metaphorical garden does
Yeah.
start to get walled off.
It's kind of like, how do you want to die, right? Like, it's like, do you want to die instantly, like, and just say, oh, this is not a decentralized protocol at all, or
Right.
do you want it to be completely decentralized and you just get eaten up by these big ass exchanges? If we had the answer, I'm sure that people would be calling us off the hook. So I don't know what the actual answer is. So
Yeah, Kieran says he's a dev, so maybe Kieran can put together the pool for us.
Shun says that's not a good idea to restrict staking votes. I generally agree. I was just kind of like riffing off the top of my head of how you would be able to make sure that these big players that Mike's talking about isn't controlling the network entirely. So
For those that don't know, Q is a giant centralization proponent.
Yep.
For all of you. No, I'm just kidding.
let's destroy the blockchain altogether, fellas. Let's roll back Bitcoin. Let's hit Monero and then we're done, guys. We're flirting with 2 hours
in,
here.
Yeah, 2 hours in. This one's real quick. I'll give it over to you guys for closing comments. But this is something that I've been following for years. This is like one of the most exciting things that I see happening with crypto. Basically, the story is that HTC will now allow the mining of Monero to happen directly on its Exodus blockchain phone. So, for those who don't know, there is a cell phone company called HTC. You know, everybody's pretty much Apple or Samsung at this point, but HTC has a Exodus blockchain phone and a variety of other kind of quote unquote blockchain phones. They've basically gone full blockchain with this stuff, and now are going to allow users to mine Monero on this phone. Now, if you can mine Monero on a computer, but the issue becomes the cost of power to do so, right? So if you mine Monero on a laptop, you're making about 6 cents per day while burning about 65 watts of power. So you're making 6 cents to spend almost 16 cents daily. Doesn't make any sense. Now, the phones have figured out a way to make quite a bit less, 0.0038 cents of Monero per day, but the electricity cost to do that is half. So you're making less, but you're also spending significantly less, and thus mining Monero at a at a profitable rate. Now, I don't know why they chose Monero and not others, but basically the phone will be set up in a way that uses something called DE Miner from Midas Labs. Midas Labs is a pretty significant company in the space, and the phone will be able to switch back and forth from mining to acting as a phone and using its computing power for those various actions you can do on a phone. So the reason I'm excited about this is because, to me, the most obvious way to onboard people into digital money or cryptocurrency is to use the hardware that they've already purchased to kind of like in like a use to earn model, right? HTC has also flirted with a blockchain router, right? So same deal, where it's a router run by HTC, lets you run a full Bitcoin node at home, has built-in VPN privacy, and uses the Brave browser, uses Proton Mail email service, right? It's a big focus on privacy. So maybe that's why they've chosen Monero there. But to me, that is going to be a big kind of onboarding route for retail, when me, as somebody who has a laptop or a TV or a phone or a router, right, that I basically spend money on, if you can allow me to download something for free that's going to have me generating cash for no reason, I'm providing the benefit of running the node for the network, which is going to improve the network, while also getting paid by the network to do that, right? It's a no-brainer. And everybody has, whether it's a phone or a computer or a TV or a router, everybody has at least one piece of hardware. And you kind of hopefully down the road get into this future model of every piece of hardware being able to run a certain network that owner of that hardware believes in, right? So if I'm a huge Monero fan for privacy, and my iPhone or my HTC phone can support the Monero network and I can get paid to do that, I'm going to do it, right? Or maybe it's ETH or Bitcoin or whatever the case. So, other than that, not a ton of news on that article, but like I said, thought it was super cool.
Yeah,
And
but
imagine seeing, like Note 7 issues where like phones start exploding because they're mining like Monero or something. Suddenly nobody, with HTC can be, let inside the plane and all these issues. Or like, like I can see that backfire, but also if like, let's say carriers start like throttling, if you're using a lot of cellular data to do this, if you're not using Wi-Fi, like there's a lot of things. Like it sounds great on paper. Like I really think like that is the future. Like we might, like you said, provide the decentralization. We have the hardware. Like it can do a lot of things. Yeah, but there might be some struggles in the way.
yeah, I want to get into a quick, or at least I give people insight into something Vitalik said about this, because he pretty much quoted this. He said, mining on phones is a fool's game, goes against everything we know about hardware economies of scale and more likely to trick users with false hope than help them. Staking on phones, on the other hand, is, in my opinion, quite promising. Then someone goes on to say, hey, what do you mean? Like this seems like a no-brainer. He said, as though proof of work is some virtuous act of working with blood and sweat and not largely just sitting around waiting for hardware that you bought because you're rich to make you even richer. So I think what he's getting at is that proof of work has been found to kind of be that plutocratic. Yeah, that's the word I'm looking for. Where people like we're sitting here talking about everybody on the subway kind of having a phone that mines Monero, whereas most likely what'll happen is just mining farms of these phones will just sit, and be used by these people who have large sums of money. So
Vitalik loves to say this, but then we have the conversation we just had about proof of stake. You know what I mean?
Exactly.
It's like,
Rich guys coming in,
Just because proof of work is plutocratic doesn't mean that proof of stake is not plutocratic.
Yeah.
Like it's a backwards way to get at the logic of proof of stake being better than proof of work. You know what I mean? Like, I don't know. I see what he's getting at. And a lot of times these miners, like there's one in particular that I can't remember the name, but it's like an in-home miner thing that you get. And it costs like $700 or $800. Well, by the time you make up just the cost of the miner, it's already like 3 years worth. Like it takes forever to make back just the cost of the miner. So yeah, for sure.
Unless the asset increases like crazy.
Yeah, and you sell it at the right time. Yeah, for sure. So I get it, but
yeah, huge. Look, we could have that debate. I would love to have that. Let's have that on the next Layer 1 actually, because I think it's a fair point, right? Like I think there are benefits of proof of stake systems like he's talking about, but to your point, it's like, will we end up at the same spot? But dude, 2 hours. I think let's see exactly what we got here. 2 hours and 8 minutes. So
boom.
One of our best Layer 1 lives, one of our longest Layer 1 lives. We appreciate everybody. What do you guys got anything before we head off?
I don't think so. Just a reminder this week. So Deem and Q are going to be hitting a Solana interview tomorrow. So you guys should see that on Wednesday. Then on Wednesday, we will be recording the interview with Strix Leviathan, which is essentially a quant firm in crypto. A guy by the name of Jesse Proudman. You should see that on Friday-ish. And then obviously we've got something about like a desk. I don't know. What is that, Dimitri?
Yeah, this desk right here in my background. Yeah, I'm going to be doing Dimitri's desk tomorrow, 5 p.m. We're just going to do kind of recap and forecast for the week, and then wrap up for the week. That's going to be on Friday at 5 p.m. Eastern, where we're going to talk about CME commitment of traders report. So,
yeah.
Yep.
What was the last commitment of traders? Where were they sitting?
They haven't changed. It's been kind of boring, to be honest. I'm waiting for them to have a position in the market, basically, on the next report. So that's why I'm always waiting for this next report to show me what they're speculating on in the next week.
Yeah, guys, let us know what you want us to talk about. I know I didn't get to the NFT stuff. I think that will be like as we see that space grow, if we do, that either will be like a dedicated like portion of this, just like we dedicate like some portion to ETH and EOS and things like that, or we'll just break it off all together and see if we can do something for you guys there. But this has been great. Please always let us know how we can improve these, man. We really want to work with you guys to make Layer 1 like as best as it possibly can. We're rolling out some things over the next week. We've got Twitter Live next week. Absolutely. You have my word that it will be Twitter Live. We'll figure this damn support issue out. But otherwise, thanks.
We out.
Peace.